Welcome to the InsideTechnician.com and this week's free trading educational webinar clip. It is now 12:38 p.m. Eastern Standard Time on October 22nd, 2014. You are viewing a 15-minute chart of ES near contract month, December 2014. That is the S&P 500 E-mini futures 15-minute chart, the near contract month being traded again December 2014. The current prices are trading mark to the market in real time at 1933 and 75. Today's demonstration is largely based around the learned application of trend lines to specific data points to define a clear trading channel that prices are contained within, so that when prices break out of it to the up or the downside, we can identify a setup for a high probability trade that can be taken to profit from. Right now, what I'm looking at is the current channel that has been established between 1942, resistance to the upside, and 1931.50 to the downside, and price is getting closer to the downside of that channel. Earlier today, prices had penetrated on 3 different 15-minute bars. This 1942 level but could not trade through that point and close above it to reach the exact 1-minute level for an entry. And we'll get to that shortly. But as we look at the current prices trading down every consecutive 15-minute bar, the setup closely comes to the 1931.50 support level, which will be the approximated level for the exact level that the 1-minute chart lays out in order to consider trading short this trade in real time right now. The immense dump that came in here that I've identified with the eclipse clearly laid out the path for the higher probabilities of prices trading down. The short-term negative divergence that was established here clearly laid out at this point that prices would more than likely find the 42 upper side of the channel here as resistance and then turn back around, and that is exactly what has happened. So at this point, we are looking to identify where these prices can get through 1931 for the support level in real time in order to consider trading short. Now, it's obviously that the long-term smart money is continuing to move to the downside and continuing to play the market short. As we get a little closer here, we can see that as we look at the MACD indicator right now, the cross from above to below is absolute, and that the trend has officially changed on the 15-minute chart according to the indicator's findings as compared to the prices. Once again, the downside of the channel is what we're looking to get through in order to be short in this market. That level, once again, is 1931.50, and as we get into a 1-minute chart right here, it's clear to see that in this case we have an exact match of the 15-minute level as compared to where the 1-minute price data is located right here, broadcasted out into the future at 1931 exactly. Now, the difference here is that at this point, when these prices were trading at this level at 1943 and 50, prices retraced back down and then eventually moved up, but failed, as you can see on a 1-minute chart, failed to get to and cross from below to above 43.50 with a lot of volume in order to be long. We neither had the close at nor above 43.50, but no substantial volume as in this here in order to even consider trading long. There's a lot of traders who got in this trade as soon as the 15-minute level was violated, and that is exactly where they made their biggest mistake today. They got in, prices turned right back around, and they got stopped out not knowing about the simple way to analyze the 15-minute chart channel as compared to the 1-minute chart absolute trading channel that's established that has to be violated and closed either above or below in order to consider trading short. Now, according to the most recent 15-minute indicator setups, it's clear that the higher likelihood is that prices may get through 31.50 in order to consider trading short. And as we look through the entire series of indicators within this toolbox, behind the prices, we have the MACD that's, we have short-term money flow that's turned back around. A lot of things are in our favor right now, people. So in this case, we are so close to the 15-minute level at 31.50. We need to get back to the 1-minute chart and understand that if we're going to be short this trade in real time, the only way to consider this is to get short right below 1931, the exact level, again, laid out by the 1-minute chart support, which would be a preferred end for the best possible entry at 1930 and 75, which would be one tick below this level on increased volume in order to guarantee the instant price profit target located right here, and that price point is 1928 and 25. 1928 and 25 is drawn from this data point right here, broadcasted out into the future, and as you can see, that becomes the floor support level below the end becomes the new price profit target, where a trader would be looking to get out on a rally in order to lock in a considerable profit. This will play itself out soon enough, and the reality is that everything that we have just identified with is the correct application of technical analysis, all used within a smart money trading methodology that was designed by myself well over 20 years ago. We are always looking, traders, we're always looking for the best of the best trade setups and to take only those when and where. In this case, we have a clear trading channel that's established and we have sufficient volume coming in order to guarantee we get through this level and we'll trade to the downside. There are no 100% in trading, people, as you know. But high probability trading is all about knowing exactly when and where to trade. And this trade, as in the next 1,000 that I will analyze, will either turn out to be or not turn out to be a trade that I will take if and when we get through the bottom of this level here on a close and substantial volume comes in to give me the confidence and conviction that I need to trade this trade short and put hard money on it. Jeff Killian for the InsideTechnician.com. We'll see you next week on our next weekly educational video series. The best to all of you and all of the rest of your trading this week.